Hey everybody, it's Robert Keens at goldsilverpros.com. It is April 14th, 2021. We have a returning guest to the program, Kirian van Hest. Also goes by Deso, the God of Vision on Twitter. Also has a Twitch channel and a Discord channel if you want to follow him on those outlets as well. Kirian, thanks for rejoining the program.
Happy to be here.
So a little bit of background for those who haven't heard my previous interviews with Kirian. We have talked about a lot of things. He has studied economics here for many, many years. One of the things that he's done a really good job documenting is the situation with Bitcoin, Tether, and the cryptoverse. He's followed it probably better than anybody we've had on the program. So I always like to invite him back on and get an update. You can also follow him on Twitter and get updates every day on that, as well as a lot of other economic topics. So Kirian, what do you have for us today on Tether and the cryptoverse?
Yeah, well, 45.8 billion of bullshit. So we're up quite high now.
Yeah.
Whenever you look at the market cap of Tether on CoinMarketCap, it's still going parabolic. So I made a picture actually back in October of that market cap with a red parabolic line drawn against it. And even though the line on CoinMarketCap changed a few times because the scale had to be increased, the line's still parabolic, still going up straight. It's going to have to readjust pretty soon when it reaches 50 billion. And I've got no reason to believe it won't hit that within days. Last time I checked, which was yesterday, between the April 2nd and April 13th, basically 13 days, Tether printed 5 billion, a little over 5 billion, which comes down to an annualized rate of 143 billion. So if they keep this rate up, they'll print 143 billion in a year, which is actually slower than their rate in January, when it was 150 plus. So I think they're going to have to increase printing pretty soon. Either we're going to see daily prints of 1 billion or even more. Maybe I calculated that in order for them to reach a 500 billion annualized print, they need about 1.3 billion a day. They're not that far off, to be honest. So that's just how Tether is doing right now. But we had another event the other day, didn't we?
We did, yeah. Why don't you talk about that?
So Tether is supposed to be a stable coin, and it's not that stable anymore. If you look at the, well, the 1 month chart is already screwed up, but the 3 month price chart of Tether, it's not stable anymore. There are spikes, there are drops. It's almost as unstable as it was in March, or no, September. After September last year, it actually stabilized a lot more, stayed a lot around the price of $1, which is supposed to be, but it's recently become unstabilized. And during that event, I noticed that the coin, the currency pairs that are highest on the Tether markets, so not the price, but on which exchanges they are exchanged. And Tether's what else is high up with Tether is Binance coin and Binance USD coin. So Binance has two crypto of themselves, BNB, or Binance coin, which they use for platform stuff. You can use it on the platform. And BUSD is their own stable coin, which is also $1 to 1 BUSD. However, during the whole price event, I noticed that the highest markets were BNB and BUSD and BTC with Tether. And I started to figure out, well, I made a screenshot of this, that when the price dropped, I should say this better. the price on BNB, so the Binance coin, which is not tied to anything, had a very similar pattern, like almost a perfect correlation between the Bitcoin price and the dollar price of BNB.
Mm-hmm.
So you could effectively say that BNB was pegged to the dollar and pegged to Bitcoin at the same time. This makes no sense, because you're talking about two completely different things. Bitcoin moves completely separate from the dollar. Sure, you can exchange it for the dollar, but how it fluctuates versus the value of the dollar, which is still going up and down in the markets, it's completely different. And if you look at, any point in BNB's history, you'll see that the price of BNB in Bitcoin, price of BNB in dollars is different, because that's what it's supposed to be. It's two different things. However, during this event, the prices lined up perfectly, and that's just insane. How the hell could they have linked them together? And then I figured out, what if they're using BNB as an intermediary? What if the price is being arbed down between the dollar and Bitcoin, and they're using BNB as an intermediary? Then it makes sense. Then the price would be exactly the same. Now the market cap is already the price in dollars is already very close to the price in Bitcoin for BNB, but it's not supposed to be perfectly the same. So the way I figure it is, I already figured out that the whole stablecoin ecosystem is a conspiracy, because on February 15th, if I remember correctly, all the stablecoins flatlined. The market cap of all stablecoins, or the large ones, that is Tether, USDC, BUSD, and HUSD, which is Huobi's stablecoin, for about 5 to 10 days or something like that. All market caps went exactly sideways, like pure flatlined. So from that point on, I knew all these damn things were linked. So I think Tether was using BNB as an intermediary to get BUSD on its balance sheet, because Tether has a problem. People think some people think that the New York Attorney General's office investigation, that they passed that with the fine, they're now free and clear. No, Tether is obligated. I forgot the date, but I thought it was in May, and they can probably get another 30-day extension, is law. They have to show their reserves now. We are going to know what Tether says falls under their reserves, because they have to publish it. They're working on it. Everyone knows it's going to be crypto. But how much crypto, we don't know. And I suspect that they're trying to get as much stablecoin on their balance sheet to basically move the problem and say, look, banking may have been a problem, but our money is in the other stablecoin. And people are going to then ask, well, what's in the other stablecoin? Well, they're all backed, because, all attestations and such. Attestations are bullshit, by the way. I ripped the USDC attestations apart multiple times on stream. And you can't really tell anything from them. The best example I have, just off the top of my head, is that the attestation for December 2020, the recording date for that attestation was December 31st, 11:59 p.m. Now, correct me if I'm wrong, but that's 1 second to midnight on New Year's Eve.
So doesn't it seem as though, Kirian, if you're having one stablecoin on your balance sheet to support another stablecoin or another crypto, that you're basically just offloading risk from one to the other? And isn't it kind of like having these subsidiary shell companies, the scam that Enron was running, where, yeah, you can audit Enron, but you can't audit the subsidiary companies because, they're not important. Don't worry about those. And then you go hide all your stuff down in there. So on the surface, it appears as though everything looks fine, but you have to dig into all of these other affiliations or relationships. It's just another way of sketchy accounting, I think.
Well, I would say it was worse than Enron, because at least with Enron, there was still an oil company there somewhere. Tether's just printing money. It's counterfeiting. It's not even fraud. It's literally counterfeiting. And the market seems to continually forget this. I don't understand why, because the entire market's floating on it, 2 trillion of it.
Yeah.
One Tether is $1. And $1 is one Tether, because it's a stable coin. It's pegged to the dollar. As long as
Kirian, you see,
Yep.
you can't question the religion of the cryptocurrencies, because if you do that, you get attacked. And this is true, and actually it's a cultural thing, but I actually think it's part of the overall scheme. I get, every time I publish a video on gold, silver, or economics, I get the crypto spammers, and it's all about going to Bitcoin and going to this and that and the other. And
I call them crypto cultists all the time.
Yeah, they have to spam because they're trying to get people interested. They're trying to build I think, a manufactured narrative around the importance of crypto. So when I say they, I mean there are elements in the monetary system which know that the current system's on its way out. And I think that they're conditioning and programming people to accept cryptocurrencies. And
it's worse. It's worse.
Okay, yeah, go into explaining that, because a lot of people listen to this, they look at cryptocurrencies as some valuable asset that you can get into. And before you answer, a lot of mainstream analysts, people that I actually respect, well, I would say mainstream and or alternative, very popular analysts will say Bitcoin and all these other cryptocurrencies are assets, and they're wonderful, and they have utility. And it doesn't matter that we have, what is it now, 10,000 of them or whatever. They're all wonderful, and they're the new system. And look at, they're going up to 50 and 60 and 70,000, and you should jump in. And I look at this as, but you have to go back to the core value proposition. And you also have to, there's a saying, and I bring this saying up every single time in finance because it's so true. If you're sitting down at the poker table and you don't know who the patsy is, you're the patsy. So you have to understand who the other players are in that market. It's not good enough just to go invest in something because it looks cool and it's going up and your friends are into it. You have to understand the counterparty. So please explain for us the counterparty risk in the cryptos and what you see there.
Well, you already said it, didn't you? I mean, it's going up, so you have to get in. Well, that's the mantra of every goddamn bubble that ever existed.
Right.
So you want a risk proposition. Well, just saying those words, it's going up, you got to get in. That's your risk proposition right there. However, we haven't talked about this up front, but let's just do it. Usually I always just bring the data, but I never really voice my opinions on what I think, which is based on nothing. So let's speculate a little bit with the least bit of data I got. I'm sending you a link. And the thing is, we already know what the end game of crypto is here. Well, technically speaking, it's still speculation. However, the article I linked was reported in Der Spiegel. It was an interview with the ECB's Isabel Schnabel, member of executive board of the ECB, who was talking about Bitcoin. And she actually said, when questioned whether the fact that a lot of people trust Bitcoin could harm fiat currencies like the euro, Schnabel said she is more concerned that, quote, trust in cryptocurrencies might rapidly evaporate. Now, why would Schnabel, a member of the ECB, says that she's concerned that trust in cryptocurrency might rapidly evaporate?
Mm-hmm.
Well, I think they know about Tether. I think they don't just know about Tether. I think they're letting it run on purpose because it's very simple. Zero Hedge is pumping Bitcoin like crazy because everyone's convinced it's this savior to lead everyone outside of the system of oppressive finance and big banks and leverage by trading 125 times leverage perpetual futures on Binance. But never mind that. No, it's the savior, and it's independent of everything, even though Kraken's now a fractional reserve bank itself. And Coinbase is going public today. But no, decentralized. People are being led into a trap, basically. And the moment there's enough people in, which is basically today, because Coinbase is going public now, and I'm dead sure it's their payoff, because, you know, the Coinbase guys can't touch the reserves behind USDC coin, or because USDC.
Well, not legally anyway.
No, there's reserves. Yeah. But if you have shares in a company that goes public and you sell those shares to the public, well, then you just earn money legally. Mm-hmm. So they can just offshore that money. And the moment that money is offshore, they are rich for the rest of their lives. You can do whatever the fuck you want to them.
In that, Kirian, didn't they just transfer risk to the shareholders as well?
No, they didn't transfer risk to the shareholders. They basically transfer the back to shareholders. This is a pure back transfer. Coinbase worthless. The moment USDC coin goes, the entire faith behind Coinbase goes, because Coinbase is supposed to be the legit one. USDC coin was, I keep saying USDC coin, but it's USD coin, so USDC. But it was created in October 2018 after Tether had his attestation dust up in July 2018. It was created as a more trustworthy response to Tether's problems. So the moment everyone realizes that's just a big scam, the entire stablecoin ecosystem is just going to fall apart. So Coinbase at that time is going to lose all customer trust with the disappearance of stable coins, ghost liquidity. So crypto is going to be a tenth of the market cap it is now, based on pure USD demand. Everyone will lose so much money that everyone will be demanding the regulators to step in and fix this. Get rid of the fraudsters. Get rid of the shysters. We still love crypto, but we hate the fraud. So the ECB, the Federal Reserve, the Treasury, and the SEC, the CFTC, everyone's just suddenly going to wake up and step in. And within a year, crypto, as we know it, is going to be dead. Meanwhile, all the CBDCs, the central bank digital currencies, will have a quote-unquote blockchain and quote-unquote ledgers integrated with them. And it will be quote-unquote safe crypto. And because everyone will want to, get one, free money, because outsized returns always work. It worked with Tether. It'll work for the central banks. And two, they want security and safety. And everyone will just flock to the CBDCs. So that's the setup here. Crypto is basically the fall guy for the crisis they need to create in order to get people to love central bank digital currencies.
Yeah. I think you've outlined it. I think this is something a lot of us have speculated on for a while. And, whenever I talk about cryptos, there's a certain segment of my crowd, because I talk about general economics. We talk about everything, but of course, obviously my service is called Gold, Silver, Pros. Whenever I talk about cryptos, people think that I'm choosing sides and that I'm anti-crypto. So I want to give a little bit of my background just for a moment, because of the way we're speaking about it. I've worked in technology for 25 years. I had 3 degrees in the space, including a master's. If there's anybody on this planet that would support crypto if it were legitimate and not a total scam, it would be me, because I've lived this stuff. I was inducted into the Honor Society, my master's degree ceremony for computing professionals. I was first in my class. I graduated first in my class at the second-rate program in America for cybersecurity.
Oh, congratulations.
So thank you. So I don't say that for any other reason than to illustrate the fact that I'm not just a gold bug or a gold guy. I came to gold because of the problems in the financial system around 2008, like everybody did, or like a lot of us did. And we all sort of woke up and started asking questions. I would love to believe that cryptocurrencies as they're currently implemented would be a solution to the fiat money problem. But the problem is I know too much. I can read through, I can see between lines just like you can. And you're brilliant. You're absolutely brilliant at it. And you spend more time doing this than anybody. And that's why I like to have you on. But for the audience listening, I don't want them to think that we're just bagging on the cryptos because we're a bunch of gold bugs. That's the furthest thing from the truth. The furthest thing from the truth. It's because we see it for what it is. And it's a system which probably could be used for good if improvements were made. But as it stands right now, it's not. And anyway, I just wanted to, I wanted to throw that little disclaimer in there because people like to put people into buckets and put labels on things. But you and I are both, highly educated, smart guys, and we just see it for what it is. And those are my comments.
Honestly, I couldn't give two shits if crypto lived or died. I just know that I've seen The Big Short many times, and I just remember Mark Baum's speech during Bear Stearns' collapse that for all human history, fraud has never worked. If it had worked, we would have figured it out by now.
Right.
But it doesn't. And it's always the little people that end up paying. Now, Michael Saylor is going to lose his $1.1 billion. And Elon Musk's Tesla is going to lose his $1.5 billion. And I couldn't give two shits about those.
Yeah.
But there are so many people who I've talked to over the last few months who just say to me, yeah, I always have a bunch of tethers. Yeah, I need them to exchange between altcoins. Both those people are going to lose it all, aren't they?
Yeah, yeah.
And those are just regular people who got into crypto, and maybe because of greed, because the price is going up. But we are living in an age where so many people are focused on anything that goes up rapidly, because prices everywhere are going up rapidly, and we need to focus on earning more currency. It's a function of this whole dirty federal fraction reserve system that's coming to an end. The currencies are going to hyperinflate. People say that the US CPI wasn't that bad. Well, the German CPI came in double of expected. It's a huge jump in March. So there's more to the world than the US, as much as it tends to forget that.
Yeah.
So, it's all fucked. It's all fucked. And we need to get more income ourselves, because the wages are not going to keep pace. That is one of the hallmarks of hyperinflation. And everyone's looking for outsized returns.
So let's transition, Kirian, to another subject you've been doing a lot of research on. And by the way, for everybody listening, this is on Kirian's Twitter. It's at Deso Games, which is his nick. You're looking at ARK, and so I'm just going to let you kind of run with this, but I just wanted to introduce the topic. So you've done some research on ARK. Kind of explain what ARK is and what you're seeing there.
Right. So we had timed this interview. I had timed this interview completely wrong, because instead of minus GMT, I should have done plus GMT. So I had a few hours to spare. So I actually know about ARK. ARK is Cathie Wood's ETF. Now, I don't think I need to explain too much about that, because it's been all over the airwaves. And she's this new genius investor. And ARK is an actively managed ETF that has grown way out of proportions. But she has a very weird investing style. She thinks that Tesla is going to go to 3,000 per share in like 2030 or something. And that would make Tesla 20% of US GDP. Well, whatever. But her investing strategy of late, since the market has turned downwards and stocks don't always go up, is to sell the most liquid names like Tesla and invest more heavily into illiquid companies. Well, I can't call them small anymore, but I think they were when she invested in them. And basically make bigger, more riskier bets. Now, I follow Tesla charts on Twitter, and I would highly recommend anyone who wants to know anything about Tesla or ARK to just follow that channel. So I knew that Cathie Wood has some outsized positions, or well, a large percentage of float across a couple of her ETFs. Turns out a lot of these ETFs buy double. So at this point, I have to assume that all the stocks that are on the ARK ETF are also in her other ETFs. So the main ETF being ARKK, and the other ones just have ARK with a different letter like Q or W or F. I think she'll have the all alphabet by the end of the year. So there's this website called arktrack.com. And apparently it just lists whatever ARK has on their ETF balance sheet, which is very handy. It tracks all their ETFs. And I went through the data for April 12th of 2021. And the problem was worse than I expected. Apparently, she owns more than 10% of the float of a lot of biomedical companies, which are very high risk plays. Now, I haven't gone through the quarterlies of each company because there's a whole bunch of them. But people who have seen my streams, or the other day I did a video with the early stage investor on Cathie. People know how I analyze companies. I basically go through statistics to see if I can see anything that's undervalued. And in that case, I just move on to the quarterlies and analyze it deeper. So I did the same surface level analysis on basically all the names in the ARK ETF that I didn't recognize. Because there's PayPal in there. Fine, I'll believe PayPal's a good company. There's Tesla, sure, fine. I'll believe Tesla's still staying up there for a while. But stuff like Ceres Corp, never heard of it. Ceros Pharmaceuticals, don't know. Compugen, I've never heard of these companies. So what I did is I selected a few stats so I can, within 280 characters on Twitter, show what the real value of these companies is. Because I'm dead sure at this point, she hasn't even looked at any of these. She's using purely mathematical models to predict price and moving on the basis of that and trying to value invest on the basis of price. That never works. But I included stats such as price to book, market cap, debt to equity, because you know how much debt a company has is important, and net income. Net income was the one I was most interested in because I know it's not hip. I may be traditional. It's very old school, but I like to turn a profit. So I basically, that's one of the things I look at when I look at companies to invest in. Are they turning a profit or not? If they're not, how fast are they losing it? Are they losing their money? Because, you know, I invest in junior silver miners or miners that are turning from explorer to producer. And there's always a lot of dilution and debt involved. I've invested in companies with like 100% debt to equity. So I'm not adverse to debt, but it's something to keep in mind. So having gone through her entire list, let's just see how many I ended up with. I never counted. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 21, 22, 23. And the last one is a 2.5 billion one worth of value. So that's 23 stocks where she owns close to 10% of float, or more than 10% of float. That means what the significance of this is that when you want to take profits, you have to sell. The amount that you have to sell matters, because if you're a big fish and you sell a big enough block of stocks, well, the stock itself is going to go through the floor, because the market needs to have the demand for it to absorb that sale. So if you have, say, an average volume of 1 million and you have 10 million shares to sell, even just assuming that that volume is pure buys, which it isn't, it would take you 10 days to unload all your stock. Now that's what we call liquid, because Tesla trades like 100 million shares every day. So if you got 10 million shares of Tesla, you can unload that in an hour, and the price will hardly even shift. But with small stocks that have small share bases, that's not so much the case. That is why people were reporting on it, and that's why her investment material is completely ill-advised. But to just give you a few numbers on how bad the situation is, the very first one on the list that I came across, Cirrus Corp, with a C, it has about 154 million shares in float. So it's 170 million shares and 90% float, just about. ARK owns 23 million of those shares, divided amongst ARK with a K and ARK with a G. So there's two ETFs that own it. These total amount of shares, so 23 million out of about 154 million, comes down to 15.29% of the float. Now, the average volume in the last 7 days is 1.5 million. So if you want to know how long it will take for Cathie Wood to unload her Cirrus Corp shares, should the company be worthless? Well, if it's worthless, no one's going to buy. But even if still everyone wanted to buy, with the average volume of the last 7 days, it's going to take 15 days. It would take them 2 weeks to unload all their shares if everyone else bought them off them, instead of volume being both share buys and sells. Now, I've also included in the thread the 3-month volume, because as it turns out, in just about all of these stocks, the volume 3 months ago, or the average volume over the last 3 months, is a lot higher than the average volume over the last week. Now, that doesn't mean it can't spike, but it does mean that if you're trying to offload shares over the course of a week, that was a lot easier 3 months ago than it is now. So that's just the question of how difficult it would be to unload these things. The question then is, do you want to unload them? Because, of course, Cathie is investing in these things just to hold on for the future, because she thinks she's the new Warren Buffett and is going to own the pharmaceutical space, apparently. Well, the net income was 61 million in 2016, minus 61 million in 2016, and it was minus 58 million in 2020. It's gone sideways for 4 years. It's not going anywhere. So it's definitely not earning them any money. So the question then is, well, maybe it's still on the bottom, maybe it's still undervalued, maybe they're on the cusp of a discovery and they're going to go up soon. Well, fine. But the price to book of that company, or how the market cap compared to all the value on the books, is 9.8. So it's basically 10. So you're paying 10 times for what the company is worth in the books for a company that has a net income that's gone sideways for at least 4 years, has a short interest of 9%, and Cathie Wood will take more than 15 days to unload all her shares. It's insane. And that is one of the least egregious companies on the list. I will give you the most egregious one because it shocked me. Materialize NV. It has about 54 million shares out there, but the difference is here. It only has a 38.68% float. ARK, between ARK and RQ, has 6.7 million shares, or 6.8 million, close to. As a percentage of float, that's 32.38%. She has a third of the float. between her two ETFs. She has 235 million worth of value of a $1.8 billion market cap company, which is 12.7% of cap, by the way. And the price to book of this company is 11. The debt to equity is 86%. The net income in 2016 was minus 3.2, and in 2020 was minus 8.7. Their entire balance sheet is fueled by rapid debt expansion. But she has a third of the share of the float.
Yeah. So Kirian, is, you know, a lot of what is purported to be good investments in this market aren't great investments. They don't create value. There are companies that have outstanding or just ridiculous valuations, I would say, Tesla, who do not have a history of creating value. Not to pick on Tesla, but they typically don't make money. I think recently they started making a little bit, if you believe their books.
Oh, no. Pick on Tesla all you want. It's one giant scam. Everyone knows it. Elon's being...
So that, the whole point being, you know, what you've outlined here with ARK and what we saw with Archegos, you know, as the system gets long in the tooth, as the system blows up to this level, to this stage, you start to see a lot more of this stuff. And all of this stuff makes the Bernie Madoff scheme seem like peanuts in comparison. And that's one of the warnings that I wanted to give is be careful what you get into. Be careful what fund you get into. Do your research. I mean, honestly, I stay away from the stock market right now unless it's a mining stock that I'm looking at, because I understand that sector and it's so undervalued historically. But for the general stock market, I basically stay away. But if you're going to be in it, just be careful, because a lot of this stuff goes on. And if you just invest what everybody else is investing in, whether it be crypto or the stock market, you're going to notice there are a lot of scams. There are a lot of schemes designed to get your money, but may not end up leaving. They may just basically leave you holding the bag. And that's where I wanted to end up this interview. I know we've got a lot more we can talk about, so I want to have you back on the program to talk about more things, because there's a lot more that you're researching, and you have such great detailed research. But I just want to leave, you know, the listeners with this thought. With all the stuff that you've researched, Kirian, just, you know, for people to be careful what they get into. Make sure that you understand the counterparty. Make sure when you're sitting down at that poker table, you understand who's on the other side of you. A lot of times they know a lot more than you, or the schemes that they're trying to get you into, or, you know, are not set up to benefit you. So any last thoughts on that before we wrap up, on what you're seeing in the market in general? Any last thoughts?
If someone is trying to sell you something, look. Just look. That's all you need to do. Big Short started with that. Michael Burry did something no one else thought to do. It just looked at the bonds. Everyone jumps into ARK because they think Cathie Wood's this fucking genius. I just literally just went to look up what's in the ETF. I just went to look up the financial statistics of the companies, and literally within 8 hours, I'd ripped this thing apart. She's a dumb idiot. She really is. I can say that with confidence because I looked at the financial statistics of these companies. I know she hasn't, because anyone who does sees that these are trash. So that's the difference. That's the difference. Don't, well, there's one more thing that I would like to say, and it's also coming back in my books. Don't try to become rich. It doesn't work. To become rich, you need to be a certain type of person with a certain type of personality, and most people just don't have it in them. Try to become well off. Don't chase the moonshots. Don't go for the junior that you heard on the bus and someone over talking and you know this is a sure thing. No, you don't. Just find a sector that's going to do well, that you know for sure that's going to do well. Not a moonshot like a biotechnical or biopharmaceutical in which you have no idea which company is going to survive. Not crypto in which you have no idea which of the 9,100 and I don't even know how many live updates. 9,216. That's gone up by 300 in a month. I'm not joking. I'm noting it down in my book. And in the first draft, it was below 9,000. And in the second draft, a month later, it was 9,125.
Yeah. Last time we talked, it was 5,000. So it's doubled in just a few months.
Yeah. So even if one of those is the savior of mankind, I can't possibly tell you which one. I can't even make sure that it wasn't invented today or tomorrow. So don't go into any of that. Just, for instance, we know the gold sector's undervalued. We just know that's undervalued because no one cares. So just buy a couple of gold majors, Yamana, Barrick, or silver majors, First Majestic, or whatever, Hecla. It's just B2 gold. A lot of these things are currently undervalued because the entire sector is undervalued. So if you pick the one that's not going to go up the most, that doesn't matter. You have one that went up. A lot of people continually pick stuff that has gone up and is going to go down. So just keep your head on your shoulders. And whenever you see people getting rich, don't give a shit. They got lucky and you have no idea whether or not they're going to lose it all or not in 10 years or within the next 10. Because a lot of people who got rich on GME, I bet they put their winnings into something like Tesla to quote unquote secure it.
Yeah, you know, studies show that's a good thought to end with. Studies show that if you speculate, about 92% of the time, you're going to lose eventually. It's kind of like you sitting too long at the poker table. Take too many chances, and after a while, you'll get burned. And just because you get into something that does well and you get out in time, like a Bitcoin or something, doesn't mean you're going to pick that again. I mean, like we said, the system in a lot of ways is rigged against you. So tell us, Kirian, how people can get in touch with you. I've talked about your Twitter at Deso Games. I know you have a website. I know you have some books coming up. So give us information on that.
Right. So website, desogames.com. Twitter, where I'm most active, and my DMs are open if people have questions. Not about the books, by the way. That's all still very hush-hush. But I talk to people all the time. People ask me questions, and I just respond. If I'm busy, I'll, when I get around to them. I've got a Twitch, twitch.tv/DesoGames. I stream there. I do hours of streams on Thursday and Saturday currently. It's a bit flaky, but the Saturday one almost always happens. And people just ask me questions to look at stocks, and I look at stocks. Or they ask me to give opinion on a subject, just like you are doing now, and I give opinions. And it's basically for free, or during Saturdays I turn on subscriber chat, and subscription is $5 a month. It's cheaper than a newsletter. And currently I'm working on 3 very important books. Now I've already dropped the title before on Twitter. So the titles are going to be The Definition of Money, The Definition of Value, and Ethereal Value in the Crypto Future. Because we've talked about it earlier, and you said, yeah, we're not gold bugs per se. We just want a fair system, and crypto can be the future, but not in the way it's used now. I know. So I've actually gone to work on this and try to fix the problems with crypto that no one else seems to fucking care about. Mm-hmm. But I do. And the first drafts of the 3 books are already done. It will be a trilogy released all at once. And I'm pretty sure at this point, now that the first drafts are already done, and I'm done with the second draft of the first book, that this is going to be a big one. This is really going to be one of those big economics books that only comes by every once in a while. And it'll change something. It'll change the way people think. It might take a few years for me to convince people that this might actually work, because it's pretty fucking advanced, even if I do say so myself. But when it comes out, you'll know. You'll know, and it'll be available. I'm going the mainstream route on this. I'm gonna find a publisher, get some help with publishing, and just trying to get this information as far as wide as possible. It'll be, I'll try to make, I want to make a cheap version. So for students, for normal people who are short in cash, it'll just be a paperback. And I want to make a hardback version that you could put on your shelf next to The Wealth of Nations or Milton Friedman's books, and basically tell people that you're smart when you never read them.
All right. Thank you, Kirian, so much for being on the program. When you get your books out, we'll have you back on, of course, and we'll probably have you back on before then as well.
Yeah. Thank you for having me.
Yeah, I appreciate it.